Hello students, so welcome to this particular session on the case laws for May 22 and November 22 attempt. Students, we are going to complete the case law in the next 2 hours. This is approximately around 75 case laws which are there. Devote 2 hours for the lecture, and I'm telling you students, you'll be fully sorted out with the case law series. This is a PDF which I'm using it, students. This particular PDF, students, I'm just putting it in my Telegram channel also. on 18th you will find the PDF. The 18th of May you'll find the PDF. Just go to my Telegram channel. On 18th of May you'll find this particular PDF, students. So let's start with this one, students. So what I have done is that I have made some theme of various case laws, and accordingly I have made the compartments. So we are doing the case law on basis of some theme. Like for example, the first one happens to be condonation of delay. So on condonation of delay, what are the various case laws which are there? On that basis, we are going to discuss those things, so that at the end of it, we should also remember. The many students are asking, sir, what about the name of the case laws? Is that also needs to be remembered? Students, name as such is not that important, but what is very important is the content. The content of the case law is very important. If you can remember the name, nothing like that. Okay, but if you cannot remember the name, please take it from me, they don't allocate any marks. IC already has made it clear that if you have not written the name of the case law, that does not mean that any marks would be allotted or deducted. But yes, if you do remember the name of the case law, please do make a mention of it. Fine. Let's start with this. So condonation of delay, there are 2 points, students, over here. One is, yes, condonation can be done, delay can be condoned, and in another case the delay cannot be condoned. There are two case laws, Regen Power Tech Private Limited, where there was a delay that has taken place and that delay was condoned. Regen Power Tech Private Limited. And the second case law is the DCIT versus Pepsi Food, where there was a delay and the delay was condoned. So let's look upon to that. When the delay was condoned in the first case of Regen Power Tech Private Limited, students, what has happened is that the SSE could not there was a delay, students, on the part of the SSE to undertake the audit. As you all know, the tax audit report has to be filed a month before the due date of filing of the return of income. But the very fact that there was a delay on the part of the SSE, there was a delay on the part of the SSE to undertake the tax audit assignment. And there was a reason for it. There was an issue with the previous auditor. There was a previous auditor who did not give some sort of a certificate of no objection to the subsequent auditor, and because of that certificate not being received by the subsequent auditor of no objection, that the subsequent auditor cannot undertake the audit. So therefore this procedural delay that took place was something which was beyond the control of the SSE. All of you will agree to this. This was beyond the control of the SSE, and therefore in that particular case the delay was beyond the control of the SSE. And since such delay was beyond the control of the SSE, in that case, students, whether such delay can it be condoned, if there is a delay, then to undertake the tax audit assignment, or to delay to file the tax audit report. Because of this reason, the reason which I have told you, that the previous auditor has not given, or has given very late, the no objection certificate to the subsequent auditor. So because of this delay, whether whether this delay could it be condoned, whether this delay could it be condoned by the subsequent auditor, and the answer is yes. Such delay, students, could be condoned by who will be condoning the delay, students? The severity. The power to condone the delay, students, in that case under section 119, such power is with whom? With the severity itself, and that exactly is the point, students. So that is one. The second one is, students, the Pepsi Food. Now, students, I have done a marking of it because I think all of you are aware that in the examination you get the case law for 3 marks or maximum 4 marks. So what you need to do, students, is that you have to create 2 points or 3 points maximum for putting up the answer, and one point specifically what is the conclusion. So therefore there could be two or three layers of pointers that you should always keep in mind, and always keep writing the answers in point, students. Always have the habit of writing the answers in point, because that is what the ICI will expect from all of you. Now students, this is about, as you all know, in ITAT you want to take a stay application. So you can get a stay application, every one of you are aware. So if there is you want to put a stay on recovery proceedings while the matter is before the income tax appellate tribunal, so you file a stay application. Obviously you know there is a 20% threshold, a 20% pre-deposit of the amount that has to be done, isn't it? Students, generally as far as the ITAT is concerned, the time limit to complete or to pass its order, the time limit to complete the order is 4 years from the end of the financial year in which the application was being made. The application of appeal was being made. That is a 4 years time limit in which the ITAT can pass its order. However, if a stay application is also being filed before the ITAT, if the stay application is also being filed before the ITAT, then students, what is the time limit to pass the order? Then the time limit to pass the order happens to be 365 days. Then in that case it is 365 days. The ITAT should make an endeavor to complete its proceedings by passing its order. What if within that 365 days time limit the ITAT could not pass its order? Then what is the implication? So the implication in that particular case would be that the stay gets vacated. The next question therefore is, what if the what if in this case the delay on the part of the delay to pass its order was not on account of the SSC. The SSC has not made any default which has pushed the ITAT to delay in passing of its order. So in that case what happens? So students, please have a look over here in this case. So if the delay was not on the part of the SSC, whether in that case the stay application can it go then beyond 365 days? And the answer is yes, it can. This is what has been held by the Supreme Court in Pepsi Foods Limited, that if the delay was not on account of the SSC, then in that case the stay over the recovery can go even beyond 365 days. This is very important case law, students. In this context, let's have a look, and I will make you read only the Pepsi Foods Limited, only the relevant portion. The apex court observed that the appellate tribunal, wherever possible, has to hear and decides the appeal within 4 years. So we all know 4 years. 4 years from the end of the financial year in which the appeal is filed. It is only when a stay is granted by the appellate tribunal, the appeal is required to be disposed of within 365 days. That's it. Any order of stay shall stand vacated after the expiry of the period mentioned in the section only if, this is important, any order of stay shall stand vacated. So stay shall be vacated. Stay shall stand vacated after the expiry of the period. After the expiry of that period, which period? 365 days. The 365 days. Only if the delay in disposing of the appeal is attributable to the SSC. So in that case, if you what does it imply? It implies that the stay will not be vacated if the delay in disposing of the appeal is not attributable to the SSC. Is that clear to all of you? So this is the second case law. The third one, students, is on the Spinacom. This Spinacom case law is already being targeted earlier, but still I consider this to be an important case law. So just keep this in mind. Students, in Spinacom, what has happened is that the appeal, there was a significant delay in filing the appeal before the High Court. Before the High Court, you should file the appeal within 120 days. But then there was a huge delay in filing the appeal before the High Court. And what has happened, what the SSC actually have told to the court was that it has made an application for rectification before the ITAT. Now students, all of you, we should always compare two important points. Please pay attention. There are two important aspects that you should always keep in mind. The first one happens to be, students, the first one happens to be what? That the ITAT is the final fact-finding authority, and beyond that, the question that has to be targeted has to be the question of law. ITAT is the final fact-finding authority, and beyond this, that is before the High Court, what has to be challenged is only the substantial question of law which is involved in the case. That is what it is. And the second point is that the rectification application that you file before the ITAT is in respect of what? Is in respect of an apparent mistake in the order of the ITAT. So apparent mistake in the order of the ITAT, for this purpose only you file the application for rectification before the ITAT. So this is the two important point. Now please understand, the SSC said that before the High Court that the delay in filing the appeal before the High Court was because that the SSC has filed an application, the application of rectification before the ITAT, and it took time to the ITAT to dispose of this application of rectification, and hence after that the ITAT has disposed of the application of rectification, then only I came before you. Now you just tell me, students, aren't both of them completely distinct to each other? One, you're talking about rectification application which is in respect of some apparent mistake in the record, versus filing an appeal before the High Court which is in respect of a substantial question of law which is involved. So there are two distinct scenarios in this case, and that is the reason why, students, it has said that in this case the delay cannot be condoned. So this is the only 2 points, students, that you have to write. That for what is the purpose of filing an application before the ITAT? This is the purpose. What is the ground for the rectification? This is the ground for the rectification. And the appeal which is filed before the High Court is in respect of what? It is in respect of substantial question of law. So if you see over here, students, the Supreme Court held that the application before the ITAT under section 254 subsection 2 is for rectifying a mistake apparent from record, which is much narrower in scope, students, much narrower in scope as compared to what, students? As compared to the appeal before the High Court. Supreme Court held that under section 260A, which is the appeal before the High Court, an order for ITAT can be challenged on the substantial question of law which is involved. And point number B, Supreme Court stated that the appellant had option of filing an appeal under 260A, while what he could do, that you could directly file the appeal within the time limit which is involved, and just make a mention that there is already an application which is submitted before the ITAT, an application for rectification of mistake apparent from record. An application for rectification of mistake apparent from record. You could have simply would have done that, because obviously that is only just to inform that this is what is the present position. Okay, so that is what it is, and this is the reason why for this application was not been the delay was not been condoned by the court in this regard. Now this is an important case law, students. Raghuveer Synthetics Limited, Supreme Court decision. This is about the rectification under 143(1). Students, while sending the intimation, the assessing officer can rectify any apparent mistake. So while the intimation is being processed under 143(1), the assessing officer has got the power to rectify any apparent mistake. So the question that came up was, if the assessee has filed a return in which the assessee has overlooked the binding jurisdictional High Court judgment, the binding jurisdictional High Court judgment, meaning thereby the assessee was from Gujarat. There was already a judgment of the Gujarat High Court in one of the case which has actually told about disallowing the expenditure. The assessee has overlooked that binding jurisdictional High Court judgment. Therefore, the question came up was whether the assessing officer has got the power to rectify the return of the assessee in disallowing that expenditure on the basis of the ground that the assessee has overlooked the binding jurisdictional decision, and the answer is yes. So the Supreme Court has said that overlooking a binding jurisdictional decision of the High Court will tantamount to an apparent mistake in the return of income, and that will give the assessing officer the ground to rectify the return while sending the intimation under 143(1). This is what the judgment was in Raghuveer Synthetics Limited. Students. So the law laid down by the Gujarat High Court is binding on the assessee, and prima facie adjustment can be made by the AO. So that is what it is. So therefore, binding nature, first case law is Raghuveer Synthetics Limited. Second one is about the Ravji Bhai Nagji Bhai Thesia, in which the assessing officer has made a reference to the valuation officer. Now, if the assessing officer is making a reference to the valuation officer, so and thereafter the valuation officer reports is received, so in that case, whether the AO is duty bound, then whether the assessing officer will he be duty bound to accept the valuation as per the valuation officer report? Answer is yes. So once you made a reference, then the valuation as per the valuation report becomes binding. Students, although it's not a case law, but I'll tell you one more point. In the transfer pricing also, we know that where the application students is made to the transfer pricing officer, in that case as well we have got the same particular point. And what is that, students? In that case as well, students, we have got same particular point, that wherever the reference is made to the transfer pricing officer, then the arm's length price so determined by the transfer pricing officer, is it binding on the assessing officer? And the answer is yes. He has to accept the ALP determined by the TPO as it is. He has to primarily make this one as it is, students. Did you all got this one? So this is about the binding nature, two case law. Raghuveer Synthetics, overlooking the binding jurisdictional High Court judgment, will render the assessee the return of the assessee as having an apparent mistake, giving the AO the jurisdiction to rectify the same while processing the return under 143(1). And the second one is the valuation. Once the reference is made to the valuation officer, the report becomes binding on the DVO, Departmental Valuation Officer. Is that clear to all of you, students? Every one of you are clear with this one? Okay, so these are the two particular case law on this particular binding part. Now, students, we all know there is a section 292BB, which actually provides the much needed relief to the department, to the assessing officer, where the assessee has participated in the proceedings but has raised no objection of the validity of the notice. So when the notice may have some sort of a there could be like the notice has been sent after the time limit kind of a thing. So after the expiry of the time limit, that the notice would have been served, but still the assessee has participated in the proceedings without raising the objection about the validity of the notice. So it is for that particular context. So for this kind of a context, that 292BB comes into picture to say that the notice will be deemed to be valid if the assessee has cooperated in the proceedings without raising any objection of its validity before the AO. So the notice is deemed to be valid. But what about the case where the notice which was required to be served was not being served at all. The notice was not being served at all. The notice which was required to be served was not served at all, and the assessee has participated in the proceedings. So can we say that the proceeding is deemed to be valid because that the assessee has participated in the proceedings? Answer is no. This 292BB is only for curing the defect in the notice. Is to only to cure what? The defect in the notice, and not to cure the absence of the notice. So if there is a complete absence of the notice, 292BB will not save the department in this case. This is only when there is a case for a notice which is being served which has got certain defects. Like for example, the notice served after the time limit and still the assessee has participated in the proceedings without raising any objection of its validity. That is where 292BB steps in. So two case law, Lakshman Das, Khandelwal. Now these two case law 6 and 7 are for absence of notice. Whether 292BB can that provide the assessee the relief? Answer is no. Absence of the notice, can the provision of 292BB, can it provide the relief to the assessee? And the answer is no. So if you see the Travancore Diagnostics case here in 147, although students this case law relates to the old particular era, but still this case law is relevant for your examination. Just pay attention on this one. In Travancore Diagnostic Private Limited, students, what has happened was that here in the 147 reassessment, the assessing officer has to assess the income which has escaped the assessment. The AO has to assess the income which has escaped the assessment. And because the AO has to assess the income which has escaped the assessment, therefore the AO will be required to serve the notice under 143(2). The AO, to assess the income which has escaped the assessment, he will be required during the pendency of 147 the service of notice of section 143(2). So service of notice of section 143(2) is mandatory. The service of notice under section 143(2), students, is it mandatory? And the answer is yes, it is. So this is mandatory, students. The service of notice under 143(2), is it mandatory? And the answer is yes. So if supposingly the AO has not served the notice under 143(2) and the assessee has cooperated in the proceedings, whether in that particular case 292BB, can that 292BB make the proceeding as valid proceedings? Answer is no. Absence of notice, in that case 292BB cannot do anything. Okay, so since the notice of 143(2) is mandatory to be served in the proceedings of section 147, hence any absence of such notice of scrutiny will not make the proceedings valid just because the assessee has participated in the proceedings under section 147 without raising the objection of the absence of notice of section 143(2). Of the absence of the notice under section 143(2). Is that clear to all of you, students? Fine. So that is the point. Now students, in this particular case, Maruti Suzuki Limited, now there is a case of 292B. There are two sections now, students, 292BB, which we have just seen, and 292B, which we are going to see it now. In the case law segment, 292BB, two case law we have seen for 292BB, when there was an absence of a statutory notice and the fact that the assessee has cooperated in that proceeding, that cannot validate the proceedings because there was an absence of the notice itself. Now here the case law of 292B that we are going to do it right now is in respect of notice given to a wrong person. Notice given to a wrong person. So if the notice was given to a wrong person, can the proceedings be considered to be a valid proceedings? Now in Maruti Suzuki case, students, in Maruti Suzuki case, what happened was that the assessing officer was already informed about the fact that the amalgamation is taking place. Assessing officer was already informed that the amalgamation is taking place, still the AO has given the notice in the hands of the amalgamating company. So after the amalgamation, still the AO was giving the notice to whom? To the amalgamating company. So if after the amalgamation has taken place, the assessing officer continues to give the notice in the hands of the amalgamating company, where the AO was already informed about the amalgamation that has taken place, then whether the notice will it be considered to be a valid notice? Answer is no. This notice or the entire proceeding the entire proceedings would be invalid. See here, I'm just reading from point number B. Despite the fact that the AO was informed of the amalgamating company having ceased to exist as a result of an approved scheme of amalgamation, the jurisdictional notice was issued in the name of the amalgamating company. The Supreme Court held that the initiation of the assessment proceedings on a non-existent entity was void ab initio, and the participation in the proceedings by the appellant amalgamated company in the circumstances cannot operate as an estoppel against law. So the very fact, just because I have cooperated, just because students have cooperated in the proceeding, that cannot validate the proceedings when the notice was issued on a wrong person. Okay, after the assessing officer was already informed about the amalgamation that has taken place. Now in Skylight Hospitality, the other case law, how do we distinguish? In Skylight Hospitality, there was a conversion of a private company into LLP. There was a conversion of a private company into LLP. Now that conversion was not informed to the assessing officer. That conversion was not informed to the assessing officer, and because that the conversion was not informed to the assessing officer, therefore in that case the notice given to the erstwhile private company which has ceased to exist after the conversion has taken place, that notice will be considered as a notice where there is a mistake, and that mistake can be cured. That mistake can be cured. So here it was a case of a notice which was erroneously addressed to that particular private company instead of the LLP. So how do I distinguish whether the notice given to a wrong person, will it be considered to be valid or not? You just need to check in the question that whether the AO was already informed or not. If the AO was already informed about the amalgamation that has taken place, and still after the amalgamation AO is issuing the notice on the amalgamating company, then that notice or that proceeding so initiated is void ab initio. But where this conversion of a private company into LLP has not been informed to the AO, and the AO has issued the notice on the erstwhile company, then we will say that there is an error in the notice which can be cured. And that is what this particular 2 point would be all about. Now in Vipinwalia, students, now this is on an old case law of old provision of 147, but still the principle of the judgment is very important. Students, as we all know, in the new scheme of section 147 about reassessment, we have a time limit to give the notice for a period of 3 years. Up to 3 years from the end of the relevant AY, the notice under 148 has to be issued. This is as per the new scheme. There is also 10 years time limit for issuing the notice. That 10 years time limit, students, is essentially in respect of that 10 years time limit, students, is essentially is in respect of what? Is in respect of the 50 lakhs limit about the undisclosed assets and the income 50 lakhs. So that is a thing. Now students, supposingly there is a assessee who has deceased. Okay. So the assessment of the liability of the deceased person will be on the legal representative. The assessment of the liability on the legal representative, the assessment of the liability of the deceased person will be carried out in the hands of the legal representative. In whose hands? In the hands of the legal representative. Now, if the now as per section 159, this is very important, students. Students, as per section 159, just read this one. So 159 says what? The proceedings on the legal representative should be initiated in the same manner as it could have been made on the deceased person if he would have been survived. The proceedings should be initiated in the hands of the legal representative in the same manner as it could have been made on the deceased person if he would have been survived. As it could have been made on the deceased person if he would have been survived. Okay, so supposingly, obviously on a deceased person, if he would have been survived, you could give the notice only up to 3 years. You could give the notice only up to 3 years, isn't it? So supposingly, in this case, you have given a notice to a legal representative after the expiry of 3 years. You have given the notice to the legal representative after the expiry of 3 years. Then whether that notice, will it be considered to be a valid notice? And the answer is no. The notice will not be considered to be the valid notice. So in this case, Vipin Walia, students, what has happened was, first the AO has given the notice to the deceased person within 3 years period. Then he realized, no, this person has died, so let me give the notice to the legal representative, and he gave the notice to the legal representative after 3 years period. So the AO said that because original notice I have given within 3 years period, even if the later notice I am giving it after 3 years period, the notice would be considered to be a valid one. The court has held no. As per section 159, the proceedings in the hands of the legal representative should be initiated in the same manner as it would have been made on the deceased person, as it could have been made on a deceased person if he would have survived. If he would have survived. Is that clear to all of you? And therefore it would be invalid. Case law number 11, students, you can skip it. It was just asked in the last attempt, so it will not be targeted. So you can just skip it altogether. This is a very important case law on the faceless assessment scheme. Now this is a new addition. Faceless assessment scheme introduced by the ICI. So YCD Industries versus National Faceless Assessment Center. Okay, now students, if I can just quickly bring your attention to this part. Now just have a look over here, students. In the faceless assessment, the flow chart, I think all of you are aware. The assessment unit, just have a look to the assessment unit. Point number 8, after the every proceedings is complete, point number 8, the assessment unit will pass a draft assessment order, DAO. The draft assessment order is passed and given to the National Faceless Assessment Center. Now thereafter, point number 9, just have a look, students. Point number 9, finalize the assessment or provide the show cause notice to the taxpayer. So that draft assessment order is going to whom? To the taxpayer, just to give him an opportunity of being heard. The show cause notice is for the purpose of giving the assessee an opportunity of being heard. Thereafter, the taxpayer will give the response, and thereafter through the response, it will go to the review, and from the review, primarily it will be the assessment order will be passed. Here the question to all of you is this. Is the draft assessment order mandatory? That draft assessment order is mandatory, or the AO, the assessment unit, should pass the final assessment order? So in this case, what has happened, as you can now know, in this case, what would have happened, students? In this case, students, as you would know, that the draft assessment order was not been issued. Directly the final assessment order was being issued. So if directly the final assessment order was being issued, whether it could be considered to be a valid one, and the answer is no. It will not be considered as a valid one, students. Just have a look in this context herein. So is the assessment order passed without issuing notice come the draft assessment order to be valid one? So just have a look, students. Please have a look. So there are 3 points you'll write. Notice come draft assessment is mandatorily required to be issued in the manner specified under section 144B to the assessee before issuing the final assessment order, so that the assessee could have requested an opportunity of being heard in the matter. So assessee should be given an opportunity of being heard, and that opportunity can be given only if the draft assessment order is being given to the assessee. The reasoning of the department, now the AO said that No. Just we have given 143(2) notice of scrutiny to the SSC while the assessment was going on. So the fact that we have given the notice of scrutiny while assessment was going on, so now there is no need of giving the draft assessment order. Now students, please understand, this is a statutory scheme, and if it is a statutory scheme, you cannot say that just because in the during the pendency, during the course of the assessment, I have given him the notice of scrutiny and in that notice he got that opportunity. That cannot be an excuse to follow the statutory scheme laid down by the law. And the statutory scheme requires you to issue a draft assessment order. And that is the point. So here point number 2, the reasoning of the department that notices under section 143(2) and 142(1) were issued prior to the passing of the assessment order could not be accepted in the view of the schematic design of the statute. The department cannot sidestep the statutory safeguard put in place by the legislature. So, is the draft assessment order mandatory? Yes. Can the department sidestep the statutory safeguard put in place by the legislature? No. And that exactly is the point. So this is the point, students. So here we have seen in this context, keep in mind, students, 143, we have seen about the notice angle 292BB. 292BB, the two case laws, absence of the notice and the SSC cooperated in the proceedings. Can 292BB come to the rescue of the department? No. And 292B, where the wrong notice was being sent to a wrong person. So we have said that if already informed, still the notice was given to the old SSC, invalid. If not informed and the notice was given to the old SSC, in that case it will be considered to be an error. And the third one is deceased person. The assessment would be on the legal representative, and the assessment on the legal representative should be in like manner as should be in the same manner as it could have been made on the deceased person if he would have survived. If he would have survived, students. Is that clear to all of you, students, in this case? Now, students, in the case of Raham Foundation, this is a High Court judgment, again an important judgment in this regard. So what was the judgment herein? First of all, ITAT, as you all know, is a final fact-finding authority. And because it is a final fact-finding authority, students, it has to pass the order as it thinks fit. As it thinks fit. Because it is a final fact-finding authority, it will have to pass the order as it thinks fit. So in the case of Raham Foundation, students, what happened was that the CIT, who is the authority to grant the registration to the trust, the CIT has rejected the application of the trust by passing an order. The appeal against the order of the CIT was filed before the ITAT. Now the ITAT, on the basis of the same material, because that is important, the ITAT needs to prove the CIT wrong. So how the ITAT can prove the CIT wrong? The ITAT can prove the CIT wrong on the basis of the same material which CIT had. It can say that the CIT has misinterpreted the evidence which was there in its possession. So therefore, in that case, being the final fact-finding authority, the ITAT can say that Mr. CIT, you have simply misinterpreted the evidence that is there in your hand, and accordingly the ITAT can grant the registration to whom? To the trust. The ITAT can grant the registration to the trust. But the important point here is, on the basis of the same material, the ITAT needs to conclude what? That the CIT has misinterpreted such evidence. Students. So that is the point. Now students, now ITAT, High Court and the Supreme Court, students, they can pass an ex parte order. ITAT, High Court and the Supreme Court, they can pass an ex parte order. Now this ex parte order, which is to be passed by the ITAT, High Court and the Supreme Court, that is in respect of, students, that is in respect of what? So this ex parte order, which could be passed by the High Court, Supreme Court in this case, that could be in respect of what, students? Any idea behind that? So students, this particular judgment which could be passed by the ITAT primarily is on the basis of that if there is no SSC who was present on the date of the hearing, then the ITAT
or the High Court or the Supreme Court can pass an ex parte order. Means without the presence of the SSC or the parties, the order can be passed. Now, even if this is an ex parte order, students, even if it is an ex parte order, still what? Still that particular order has to be passed by the ITAT, being the final fact finding authority on its merit. Okay, that is after taking into account all the material, the ITAT primarily should pass the order on its merit. So that is what it is, students. The fact finding appellate tribunal should not shirk its responsibility to decide on case on its merit, because it is a fact finding authority. Okay, case law number 15, students, you can skip, it has been recently been asked, so you can skip this gen pact particular case. Coming on the next case law, Amitabh Bachchan case law is very important. It should have been asked by now but haven't been asked, so let's look upon to this. Students, one software case law is very critical, which we will discuss it somewhere later. The issue on the computer software, whether that can be considered to be royalty or not, most likely case law of your examination. Now before that, let's look upon to this case law of Amitabh Bachchan's case. Now here, students, as you all know, in 263 a show cause notice has to be given. A show cause notice, students, has to be given under section 263. So here also a show cause notice was being given to Mr. Amitabh Bachchan, but there were two show cause notices that was being given. First show cause notice was initially given to initiate the proceedings on a particular item. During the pendency, another show cause notice was also being given on some other particular point as well. The SSC came into the argument to suggest that the new grounds cannot be raised during the pendency of the proceedings. The new grounds cannot be raised during the pendency of the proceedings. Now to that, the Supreme Court has held that the show cause notice, which is the notice to be issued in 263 proceedings, it is merely a general notice. It is merely what? A general notice which is given to give the SSC an opportunity of being heard. The show cause notice which is sent in 263 is not trying to define the scope of the inquiry. The show cause notice is only for the purpose of giving the opportunity of being heard. The show cause notice is never meant to define the scope of the inquiry, and therefore if the proceedings has been initiated under section 263, the another show cause notice on another ground can also be given to the SSC for the purpose of enabling the SSC an opportunity of being heard on that other matter. For the purpose of giving the SSC an opportunity of being heard on that other matter. So that is also a possibility, students, and this is what it is. So if you see over here, section 263 does not require issuance of any specific show cause notice to the SSC. Proceeding under 263 to be valid requires an opportunity of being heard to be given to the SSC before passing the revisionary order. And now if you see here, point number B, further the SSC was afforded the opportunity to contest before the CIT in respect of this additional issue. So the SSC was being given the opportunity. In fact, the SSC's lawyer also represented the case of the SSC, and therefore there is no denial of the opportunity of being heard. Okay, so therefore what is the requirement of 263? The requirement is to give the SSC a show cause notice, and that is the only requirement to be seen. The original show cause notice which was given cannot be considered as the notice which defines the scope of the inquiry. No, it can never be considered in that particular manner. Any show cause notice which is issued is only for the purpose of giving an opportunity of being heard. So multiple show cause notice on multiple grounds can be issued for the purpose of enabling the SSC to give an opportunity of being heard on those particular matter. Now students, as you all are aware, in section 263 the CIT revises the order. In section 263, students, all of you are aware, the CIT is revising the order of the AO. If the order of the AO is erroneous and so far as it is prejudicial to the interest of revenue, isn't it? So that empowers the CIT to revise the order of the AO's order. Whose order? AO's order can be revised. Now students, at the same time, section 263 also has this concept of doctrine of partial merger, which implies that supposingly if any item of the AO's order, if any items of the AO's order has been made as a subject matter of an appeal, if any items of the AO's order has been made as a subject matter of an appeal, then in respect of that matter, in respect of that particular matter, the revision cannot be made. The revision cannot be made, students, and that exactly is the point. Okay, so that is what it is. Now, in the case of New Mangalore Port Trust, students, what happened was the AO's order was revised by the CIT under 264. So there was a revision that took place under section 264 against the order of the AO. Question therefore was that after, so AO's order was revised by the CIT under 264. Question was that after this, whether CIT can it undertake 263 in this case primarily, and the answer is no. And why it could not do 263? Because after the revision of 264, the AO's order ceased to exist. AO's order ceased to exist. And tell me one thing, whose order can be revised by the CIT under section 263? Whose order can be revised by the CIT under section 263? It is the order of the AO which can be revised by the CIT under section 263, and that is the reason why students, we say that in such particular case, the CIT cannot revise the order of the AO. Similarly, if the AO's order on a particular point was being challenged in the appeal by the before the CIT appeal, thereafter, once the order of the AO was challenged before the CIT appeal, can the CIT exercise the revisionary power under section 263 on that particular point? If the AO's order has been challenged on a particular point before the CIT appeal, can the CIT thereafter exercise the revisionary power under section 263 to revise that particular point? And the answer is no. So here, if you see, the jurisdiction of revision under section 263 is restricted only in respect of revision of order passed by the AO. Where the CIT appeal passes its order, the order of the AO ceases to be in existence as it gets merged with the order of the CIT appeal. The order of the AO ceases to be in existence as it gets merged with the order of the CIT appeal. Okay, so that is a doctrine of partial merger. Now the Lark chemical, this is an important one herein. So here, students, if you know 263, here in 263 the time limit to pass the order, of 263 is 2 years from the end of the financial year. Now this is important, in which the order sought to be revised was passed. This is 263. And then there is 154, because this question can come up also in 154. The time limit here is 4 years from the end of the financial year, in which the order sought to be rectified was passed. There the word is rectification. Okay, rectified was passed. So therefore this question or the situation of Lark chemicals can be targeted either in 263 or 154. So supposingly the original order was on A, and there are 4 points in the original order A, B, C and D. 4 points in the original order A, B, C and D. Order was passed in 143.3, the regular assessment order. Subsequently in 147, out of 4 points A, B, C and D, A and B was being revised. Out of 4 points A, B, C and D, A and B was being revised. Means they were being reassessed. Okay, A and B was being reassessed. Now later on, after reassessment under 147, later on, say the commissioner under section 263 want to revise the order of the AO. Now the order of the AO that the commissioner wants to revise is in respect of point C and D. So the time limit to revise the order by the CIT, this time limit, will it be considered from the date of the original order of 143 or the reassessed order of 147? Definitely students, it has to be the original order, because here the order sought to be revised is the original order. Why? Because the reassessed order was in respect of A and B, whereas the commissioner wants to revise in respect of C and D, and hence the order sought to be revised is the original order, and accordingly from the year in which the original order was being passed, that the time limit of 2 years will be considered. That the time limit of 2 years will be considered, and only if the time limit of 2 years still exists, that the commissioner can exercise the revisionary power under section 263, or else it is a time barred proceedings. Is that clear to all of you? Same is the conclusion, students, also for 154. So this is what it is. Recall and review, students. Now Subroto Roy, I think I just told you about this, that the recall can be made only when this is an ex parte order. But where the order, where in the case where the High Court has heard the junior counsel of the SSC, if the High Court has heard the junior counsel of the SSC, unfortunately on that day of the hearing, the senior counsel of the SSC could not get themselves present. Question was that whether the order passed by the High Court, who have heard the junior counsel of the SSC, can the order passed by the High Court could be argued to be an ex parte order? Is this an ex parte order, students? To that the answer is no. This cannot be considered to be an ex parte order. Is that clear to all of you, students? Now students, if you see over here, this case law of Sunil Vasudeva and others versus Sundar Gupta and others. So in this particular case law, it becomes very obvious, students, in this context, that the review that you want to do, students, please be very careful. Rectification versus review. This is very important observation. Students, just keep in mind this comparison. And need be, you can copy down this one. The 3 R's, one is rectification, which should be compared with review, and the third one is recall. Recall, though, is just being put across in this table just to ensure that you don't get confused. The comparison, however, you should always do with the rectification and review. So the ground of rectification, students, all of you are aware that there has to be an apparent mistake. Apparent mistake is the key. Now in apparent mistake, there are two particular observations which can be targeted in the examination, and they are students about two things. That two particular thing which is, yes, it is apparent, and what is that? Whether retrospective amendment made, can that be the basis? Retrospective amendment, two typical case, I'm writing it over here for all of you. Whether the retrospective amendment, can that be considered to be an apparent mistake and therefore justifies the action on the part of the income tax authority to rectify its order? And the answer is yes. Similarly, if a subsequent Supreme Court judgment comes, Supreme Court judgment, students, Supreme Court decision, can that also become the basis of rectifying the order passed by the income tax authority? And the answer is yes. So two things, students, which is very typical case, very frequently targeted in the examination. One is that whether a subsequent retrospective amendment, can that be considered as a ground for rectification of the order? And the answer is yes. And similarly, a subsequent Supreme Court decision also renders the original order passed as having an apparent mistake, and hence the income tax authority is justified to rectify its order based on the subsequent decision of the Supreme Court. So the rectification is always on the basis of the apparent mistake, whereas in the case of review, students, it is always on the basis of a new evidence which was not in the possession earlier at the time of passing of the order. Which was not in the possession earlier at the time of passing of the order. That new evidence suggests that the original order is incorrect. That new evidence suggests that the original order was incorrect. Again, I'm repeating, that new evidence or the new matter was not in the possession of the authority earlier, then and only then that the authority can review its order. Which authority, I'll tell you later, but this becomes the ground of review. This becomes the ground of review. Okay, so just in Sunil Vasudeva and Sundar Gupta's case, this is what it has been said. This is the most important one. Discovery of a new and important matter or evidence which, after the exercise of due diligence, was not within the knowledge of the petitioner and could not be produced by him. So this was a new evidence on the basis which was not in the knowledge at the time of the original order which was being passed. So that becomes the ground. But if it is merely a repetition of the old argument, this then cannot be considered as the basis to review. Students, the review cannot simply be on the same material that you are changing your opinion. On the basis of the same material, you cannot change your opinion. If you want to change your opinion as compared to what you had earlier held while passing the order originally, then it is important that there has to be a discovery of a new evidence or a new matter. There has to be a discovery of a new evidence or a new matter. Only then, students, that we can say that the order can be reviewed. Only then we can say that the order, students, can be reviewed. Is that clear to all of you, students? And that exactly is the point. And this is how it should be considered. Anyway, what about the recall? What is the ground for recall? Just now we have seen the ground for recall is ex parte order. The order has to be an ex parte. And finally, the authority. In rectification, students, who can rectify the order? It is the income tax authority as well as the ITAT. The power to rectify is with the income tax authority, and that is under 154, ITAT under 254. Okay, but the review can be done only by the High Court and the Supreme Court. They are the only power, they are the only authority, that is the High Court and the Supreme Court, who can do the review. And finally, students, recall can be done by the ITAT and the High Court and the Supreme Court. The recall of the order can be done by the ITAT and the High Court and the Supreme Court. Just keep this particular observation in mind, and that should be all. The A estate, student, this is again an important case law. Student, just now we were discussing earlier where we got an opportunity to say that Spinocom judgment wherein there was a delay in filing the appeal before the High Court, isn't it? See, students, the authority, what happens is that after the ITAT, the case will go to the High Court. The High Court, before it starts for the hearing, it needs to formulate what is the substantial question of law which is involved in this case. The High Court needs to do what? High Court needs to formulate before it will start to the hearing stage, that what is the substantial question of law which is involved, on which the High Court needs to give its decision. So there needs to be formulated, they need to formulate a substantial question of law, and only when they have formulated the substantial question of law that this can be considered further. Is that clear to all of you, students? Now, if you see over here, point number A, B, and C, what it says, just have a look. The appeal before the High Court is heard only on the question formulated by the High Court and not on the question proposed by the appellant. So, formulated by the High Court. So, obviously, if supposingly the High Court merely gives its order based on the grounds of appeal without formulating the mandatory substantial question of law which is involved in the case, then such particular order of the High Court is invalid. In case if the High Court is of the view that the appeal did not involve any substantial question of law, it should have recorded categorical finding to that effect, and accordingly should have dismissed the appeal. Means if there is no substantial question of law involved, then it should dismiss the case after finding that particular fact that in this case there is no substantial question of law which is involved. However, the High Court did not did that. It did not said that there is no substantial question of law which is involved. Instead, the appeal was heard only on the question urged by the appellant, that is the grounds of appeal. Only on the basis of the grounds of appeal that the High Court has heard that case. The High Court therefore did not decide the appeal in conformity with the mandatory procedure prescribed, and hence the order of the High Court would be invalid. Hemant Kumar Sindhi and other students, this has been asked in the examination, chances are very less. That is to say, the seized asset, students, the seized asset which are there could be used only for the purpose of, the seized asset, students, which are there can be used only for the purpose of, what? Are you aware of that, students? The seized asset can be used only for the only to adjust against two liability. One, the existing liability, which is like, for example, advance tax, any like liability which is already known by virtue of passing of an order. And the second is the liability which is determined on completion of the search. Liability which is determined on the completion of search. So here was a case wherein the assessee primarily has, here was a case where, students, the assessee has made an application after 132, search has taken place, assessment was going on, the liability was yet to be determined, but the assessee just after the search has filed an application and told the department to adjust rupees 50 lakhs against the liability that will be determined in future, the liability that will be determined in future. So outrightly the assessee wanted the department to adjust rupees 50 lakhs. Is this application, is it justified? And the answer is no, because what the department can do as per the law is to adjust the asset against the liability which is determined on the completion of the assessment in consequence of search, which has yet to take place, and hence such particular adjustment, if at all done on the basis of the application of the SSC, will be considered to be invalid. Will be considered to be invalid, students. Is that clear to all of you? Fine, students. So now, students, over here now, the case law on mega trends incorporation. Now, students, here there are 2 points. One is that whether the firm, when you talk about the firm, should the firm should have only the natural person, or the firm could also have another firm as the partner. This was one of the questions that was being put across in this mega trend. So that was about the fact that whether a firm can be considered as only a natural person, or in the firm there can also be another firm who could be a partner. In that firm there can be another firm who could be a partner. Is this composition, is this composition acceptable? That was the question that was there in this regard. Secondly was that if the assessing officer has not changed the status of the assessee for assessment purpose, if the AO has not changed the status of the assessee for the assessment purpose, meaning thereby the assessee has filed the return on the basis of a wrong status, like for example the assessee has filed the return on the basis of a firm, whereas the AO wants to, whereas now since it is established that it was a wrong status which the assessee has applied, the AO should have assessed the assessee as an AOP. The AO should have assessed the assessee as an AOP, but the AO also has failed to assess the assessee as an AOP. The AO also has failed to assess the assessee as an AOP. So if the AO also has failed to assess the assessee as an AOP, then can the CIT do that? Can the CIT can change the status of the assessment of the assessee? Can the CIT appeal, can the CIT appeals can change the status of assessment of the assessee? And to that the answer is yes, because what? The power of the CIT appeal, students, you should always be aware of this. The power of the CIT appeal is coterminous with that of the AO. That is, the appellate authority can do what AO can do, and also the CIT appeal can do what AO has failed to do. So what do you mean by the power being coterminous with that of the assessing officer, it means that the CIT appeal can do what AO can do, and also the CIT appeal can do what AO has failed to do. And that exactly is the point. So the High Court held that the power to change the status of the assessee is available to the assessing officer. So AO should have changed the status of the assessment, and when it is not used by him, the appellate authority is empowered to use such power and change the status. So the CIT appeal can also do the needful. After that, students, Govind Bhai Mamaiya case, like AOP could be formed only when two or more persons voluntarily combine together for certain purpose. So that is a key ingredient for the forming the AOP. So the assessment as an AOP as a person will require the two or more person coming together primarily or forming this thing voluntarily, students. When two or more person voluntarily combine together for a certain purpose, that is when it would be considered to be a case of an AOP. Anyways, let's look upon to this one. This is a very popular judgment which has been asked earlier multiple times. If a father has taken a loan, so the property was mortgaged to obtain a loan. Unfortunately, the father died. Subsequently, the son has repaid the loan. The son, students, has repaid the loan to clear the mortgage, and thereafter the son has sold that particular property. So the repayment of the loan taken by the father, so the repayment of loan by the son which was earlier taken by his father, can that be considered as a cost of acquisition? And the answer is yes. In fact, you may remember the case law of R. Arunachalam's case, wherein the encumbrance which was put up on the property by the father, for which the son has repaid the loan, for which the son had to repay the loan to clear that encumbrance on that property, then in that case it was held by the Supreme Court that such repayment of loan will qualify as a cost of acquisition. And there was another case law, if you can remember, R. Jagdish Chandran, again a Supreme Court judgment, in which the assessee himself has taken the loan against the property and subsequently he has repaid that particular loan amount. So whether such repayment will that qualify for the purpose of deduction as a cost of acquisition or cost of improvement, and the answer is no, because the assessee, what assessee acquired was a full property without any encumbrance. So the acquisition was of the full property without any encumbrance, and hence there is no further reduction of any cost of acquisition or cost of improvement that is required in the case of repayment of loan taken by the assessee subsequently. Repayment of the loan taken by the assessee subsequently. Exemption under 54 series, students. This is also important. See Ariman Sundaram, students. Couple of issues, students, over here. Ariman Sundaram. Students, here the assessee wanted to construct the property. So here the assessee wanted to do what? Construct the property. So the construction of a property, and on that construction it wanted to claim the exemption of section 54. Question is this, that can the construction commence before the transfer of the house property on which the assessee wants to claim an exemption, under section 54 for the construction which has already started by the assessee? So the question is whether the construction activity of construction, can it proceed before the actual transfer that has taken place? Can it proceed before the actual transfer? And the answer is yes. Why not? It can definitely proceed. What is important is that the law says that the construction should be completed within 3 years from the date of transfer. The construction should be completed within 3 years from the date of transfer. So there is no restriction when it could be started. Whenever it can start, but it should be ensured to be completed within 3 years from the date of transfer of that particular house property. So it can be started at any point of time, so no harm on that. Point number 2. Is it necessary that the assessee should in order to claim the exemption under 54, is it necessary for the assessee to reinvest the consideration amount, which it has got on the transfer of the house property? Is it that consideration that the assessee needs to reinvest in that construction of the house property or in acquisition of the house property? Is that required? And the answer is no. And this is also obvious, students. If you remember, students, on the sale of the house property, if the assessee wants to claim an exemption under section 54, it has got two options. Option number one, it can do the construction. Option number two, it can purchase. Can you tell me the time limit of purchase? The time limit of purchase of the house property is 1 year backward and 2 years forward, isn't it? 1 year backward. So if the law says that 1 year backward is allowed, then by that itself it tries to convey the message. And what is the message? That there is no requirement that one-on-one nexus needs to be established. There is no requirement that one-on-one nexus needs to be established in this case. So therefore, in this context also, there is no such requirement that the assessee needs to satisfy that the money which is received on transfer is what is reinvested on construction. That is not a condition. So this is Ariman Sundaram. So can the commencement start before the transfer? Yes, it can start. The law does not have any embargo on the start of the construction. Yes, it tells you when it can or when it should get completed, but when it should be started, nothing of that sort. Second is about the reinvestment. Is the reinvestment required from the same particular property which is transferred? No, there is no such requirement. Now this is a case of metal and chromium platter, very unique case law, students. This case law is very unique in nature, and just be very careful of that. Students, if a particular company is subject to MAT, liability, so there is a MAT liability on the company. Now, in this particular context, if there is a MAT liability on the company, okay, so it computes a book profit. Now, once it computes the book profit, it will be taking the exemption. Once it computes the book profit under 115 JB, on that it will be charged 15% rate of MAT. That is the normal rate of MAT. Question that arises over here is that whether the exemption under 54 series, is it available to the assessee or not? Whether the exemption under 54 series, is it available to the assessee or not? To that the Supreme Court, or to that the High Court in metal and chromium platter, they have said that yes, the exemption, that portion of the capital gains on which the assessee has satisfied the condition of say 54 EC, the 54 EC condition is getting satisfied. So that portion of the capital gains on which the assessee has satisfied the exemption condition, that portion of the capital gain should not form part of the book profit, which implies no MAT should be charged. So this is a very unique particular case law, but you just keep in mind this simple observation. So if there is a capital gains that is going to enter in, which is there in your net profit, which is base for the book profit calculation. So if there is any capital gains which is a part of your net profit, which is a base for the book profit calculation, then if the SFC has satisfied, if the SFC company has satisfied the condition of 54 EC, then that much portion of exemption on capital gains should not be a part of the book profit. So which means that that much 54 EC portion of the capital gains will not form part of the book profit, and that is why it needs to be reduced. This is a metal chromium platter case, students, important. Thereafter, Balakrishnan and Union of India and others, again an important judgment. In the case of Balakrishnan versus Union of India and other, students, in this case, here 1037. Now, rural agricultural land, if you transfer any case, it is not a capital asset. So therefore, there is no question of capital gains chargeability, because it is not a capital asset. So there is no question of chargeability of capital gains. But an urban agricultural land, that is a capital asset. Now there is an exemption in respect of an urban agricultural land, and that exemption is available when there is a compulsory acquisition by a law. So if there is a compulsory acquisition by a law, 1037 suggests that the assessee would be eligible to claim an exemption on the capital gains arising on such compulsory acquisition of the urban agricultural land. Now, if supposingly the SSC is negotiating with the government for getting a better amount of compensation, out of this compulsory acquisition of the land. So question to all of you therefore is, if the negotiation is entered by the SSC to obtain a better composition of the to obtain what, a better particular compensation amount, whether it will still be considered as a compulsory acquisition. If the SSC is doing a negotiation, still it will qualify as a compulsory acquisition. The court has held yes, it would be. So if the SSC is entering into a negotiation only to secure the market value of the land, to secure what, the market value of the land, without having to go to the court, merely because compensation amount is agreed upon, the character of acquisition will not change from compulsory acquisition to voluntary sale. So the department wants to deny this exemption. The department wants to say that, look, this is not a compulsory acquisition because you never went to the court, you never fought against the government who acquired your property compulsorily. So because you never fought before the government, it is therefore not a compulsory acquisition. Because you were found negotiating with the government to get a better price, therefore it also cannot be considered to be a compulsory acquisition, is what was the argument of the department, which was being taken out by the Supreme Court in this case law, suggesting that this negotiation was only to ensure that what the SSC gets is at least the fair market value. And the fact that the SSC has entered into a negotiation process does not take away the fact that it still remains a case of a compulsory acquisition and not a case of a voluntary sale on the part of the SSC. This other case law, friends, you can just, it's not important that Canara Bank, you can just read it once on your own. Now we come on the TDS front, students. Now we come on the TDS front, the case law on the TDS side. Let's have a look on this particular front, students, the case law on the TDS side. So students, here in the case of Indian Oil Corporation, it was a case of a classification. The classification, whether it would be a TDS that will be under the works contract 194C, or it would be for the renting under 194I. So students, all the goods that we actually give to the transportation, to the transporters, for transportation of our goods. So the goods that we give to the transporters for transportation of our goods, the question that arises over here, is it that a case of a works contract, or did I rented the vehicle of the transporter? Did the renting of the vehicle in this context? Am I paying him for the idle? If the vehicle are idle, am I paying him for that? Answer is no. These are the cases of for transportation of my goods that I have entered into a contract with that particular person, irrespective of the vehicle in which the transportation would be undertaken. I am least bothered. My contract is only for the transportation of the goods, and hence this is a classic case of a works contract and not a case of renting of vehicle, and hence the payer would be required to deduct TDS under section 194C. Now this is a second and important part, students, which you should always keep in mind. Eurotech Maritime Academy Private Limited. Again, I am repeating, students, there is no hard and fast rule for you to remember the name of the case law. It is absolutely fine. You just remember the content. So Eurotech Maritime Academy Private Limited. Here, students, if you remember, there are many sections like 194C, 194J, 194H, 194I, 194C, wherein the individual and the HUF, being the payer of the amount, will be required to deduct the TDS only if the last year, their payment exceed the threshold limit of rupees 1 crore or rupees 2 crores, 1 crore or rupees 50 lakhs respectively, last year turnover, isn't it? Only then there is a requirement of deducting the TDS. Whereas if you see over here, students, if you all see it over here in this context, it is very clear, students, it is very clear in this particular case that so far as a trust is concerned, can a trust be considered as an individual? And the answer is no. So since a trust cannot be considered as an individual, students, therefore in this case, whether for them, will they be required to look into the last year limit to decide whether or not to deduct the TDS on the payment that they make to various person? Answer is no. This limit is not applicable for them, which implies that the trust is mandatorily required to deduct the TDS. The trust is mandatorily required to deduct the TDS. Now there is one more point in this. And what about the case where if I've deducted the TDS, okay, and I've not deposited the TDS, and accordingly the penalty is charged for deducting but not depositing, the penalty is charged. So there is one section, student, section 273B in penalty, which says that if the SSC can show the reason, can furnish a reasonable cause of their default, then in that particular case the penalty can be waived off. Now, can there be a reasonable cause, students, if I am deducting a amount as a tax which is belonging to the central government? So, having deducted the amount of tax which belongs to the central government, can I have any reasonable cause not to make the payment? Can I make the reasons like working capital? I used it in for working capital and therefore I could not make the payment. And the answer is no. This amount belonged to the government, and therefore there cannot be reasonable cause not to make the payment, and hence there cannot be a waiver of a penalty under section. There cannot be a waiver of penalty. That is the provision of section 273B, which is for waiver of penalty. That provision of 273B cannot be applied. So there are 2 points in this particular case of Eurotech, students. 2 points are there in this particular judgment. One is about whether the trust, for them the last year limit for 1 crore 50 lakhs needs to be looked upon to decide whether in the current year they will be required to deduct the TDS. No, they are mandatorily required to deduct the TDS as and when they make the relevant payment. And second is, if can they invoke 273B to waive the penalty in case when the TDS is deducted but has not been deposited with the government? And the answer is again no. Students, this is a case of a TDS on the foreign income. I think many of you are aware. If an agent who is working outside India for the Indian exporter, so the exporter from India and the agent outside India, he is working outside India for this Indian exporter to get the customers outside India. He is also getting its payment outside India. So his services are also accrued outside India, and the payment is also received outside India. So therefore no income is deemed to accrue or arise in India. And therefore, whether is there any requirement to deduct the TDS on such payment under section 195? Is there any requirement of deducting the TDS under section 195? To that the answer is no, because the requirement of TDS under section 195 is in respect of the sum which is chargeable to tax under the Act. It is only in respect of the sum which is chargeable to tax under the Act. Now, just like above, we have discussed about the penalty which is imposed on non-payment of the TDS which was deducted earlier on the payment. Same way, similar to that, this particular Sun Outsourcing Solution Private Limited case law is similar to that. Now, students, in this case, uh, if supposingly there is a failure to deduct the TDS, there is a failure to deduct the TDS, students. Now, on the failure to deduct the TDS, students, as you all are aware, there is an interest under 2011A. Can that interest under 2011A can it be uh, waived off if the SSC can prove that there is a good and sufficient reason for the default? If the SSC can prove that there is a good and sufficient reason to prove that, to that the answer is no. Students, this is a statutory, this interest is a statutory levy on making the default. What is the default? Failure to deduct the TDS. There is a 221 which provides the waiver of, like, remember there is a interest like this interest when you are an assessee in default. There is one section, assessee in default. Then in the context of an assessee in default, what happens, students? There is a section 220. There is section 220. And in section 220, in this context, and in section 220, in this context, students, interest is what is charged at the rate of 1% per month. Means when the notice of demand is given to you, and within 30 days you don't make the payment after you got the notice of demand, then the interest is charged, and that interest would be charged after the expiry of 30 days at the rate of 1% per month or part thereof. Now this particular interest, this can be waived. This interest can be waived, and that is what it is. If the assessee can have a sufficient reason for the default, if the assessee can show a sufficient reason for the default, then this interest can be waived. So accordingly, students, here the question is that can the interest which is imposed under 201(1)(a) for non-deducting the TDS, can that be waived off? There is no section which suggests such waiver, and therefore, unlike in the case of section 220 interest, wherein there is a specific waiver which is given for you to show sufficient cause for the default, but there is no such particular waiver which is available. It is mandatory in that case to make the payment of interest under section 201. This is same this is same, students, just like 234A, B and C. This is statutory. 234A, 234B and 234C. Just like 234A, B and C, which is mandatory in nature, same is also with the case of 201. Non-deduction of TDS, or maybe after deducting the TDS, non-payment of the TDS. So whatever interest which is being charged at the rate of 1% or 1.5% respectively, in all such particular cases, such interest which is being charged, will that be eligible to be waived off? And the answer is no in this case. Same as we discussed for 234A, B and C. Same as we discussed for 234A, B and C, but yes, only the CBDT under 119 has got that power. The CBDT, students, under 119 has got that particular power for giving the waiver. The next is on the trust taxation, students. Under trust taxation here, now this is a very interesting part. UP Distilleries Association, Delhi High Court, very interesting thing happened. The search got conducted in the premises of the Secretary General. The search was meant for whom? Meant for the trust, but it was conducted in the premises of the Secretary General of the SSC. Now, obviously, the SSC took they took an offense that in this context, that this search you want to do on the trust, but you are doing in the premises of the Secretary General of the trust. So the trust want to invalidate the search proceedings, invalidate the finding of the search proceedings, that this search was not conducted in the premises of the trust, but it was conducted in the premises of the Secretary General. But it was also established from the facts of the case that the Secretary General was pursuing from the same premises all the activities of the trust. So what he was doing was he was pursuing from that particular premises the activities of the trust. That is point number one. And whatever is the information that was made available during the course of the search, whatever was the information which was being made during the course of the search, was making it clear that that premises was being used by the Secretary General for the purpose of the activities of the SSC Trust and not his own activities. The activities of the SSC Trust and not his own activity, and therefore it was the evidences which was being collected and which was being relied upon by the CIT to cancel the registration of the trust. Those evidences so collected from the premises of the Secretary General was considered as a valid evidence for the purpose of cancelling the registration of the trust. Queen's Educational Society Limited, students. Now in this context, students, if the profit is incidental to the main object of spreading education, Making surplus does not lead to the conclusion that the educational becomes an entity for profit. You remember there is 1023C exemption which is there. If you see in 1023C exemption for medical and the educational institution therein, you will find that the exemption would be allowed if the trust is for wholly and exclusively for the educational or for medical purpose and not for the purpose of profit. This is a specific phrase which has been used, and not for the purpose of profit. So therefore the question that arises over here is that if supposingly the fees which is charged by the educational institution has an element of profit in this, obviously the fees that is charged will not be cut on the cost. There would be some element of profit that would be there. So if the profit which is there which is an incidental to the main object, obviously they will always keep a margin for the contingency of future, isn't it? Margin would always be kept as a contingency of the future. So therefore such margin which is taken as a contingency of future will be considered as an incidental to the main object of the spreading of the education, and you cannot say that the trust has become an entity for profit. One cannot say that the trust has become the entity for the profit, and accordingly the trust will equally qualify for exemption. The next one, which is about St. Peter Educational Institution, education that is education, the term education should be considered as what? The term education should be considered as what? The term education, student, should be considered as what? Should it be a formal education which leads to a degree? Is that what the education will mean? Or even a vocational training, even providing what? A vocational training also will qualify for the purpose of exemption under section 1023C. Whether even a vocational training, will it also qualify for the exemption under section 1023C? To that the answer is yes. It will also qualify for the purpose of the exemption under section 1023C. So education does not necessarily imply that it is only the formal education which should be considered. Even a vocational education will qualify for the purpose of the exemption. Like many vocational institutes are there, training institutes are there. So all these vocational institutes or training institute will qualify for the purpose of the exemption under section 1023C. Is that clear to all of you students? Fine. So this is also one point which is an important case law. All the students will now come to this particular case law. Case law number 53, students. Case law number 53. Now this case law has not been targeted in the examination as yet. And the next case law, students, these two case laws are the most important one. The next case law is something which was there in the last attempt RTP, and therefore this particular case law is again a very important one, Supreme Court latest judgment. So this is 53 is all about the Director of Income Tax International Taxation versus AP Muller Merck 2017 Supreme Court judgment. Now students, this is a case of a shipping company who has appointed an agent in India. Now for that purpose, across the world, whosoever are the agent of the shipping company, they have to set up or they need to install a software in their particular office premises for the purpose of getting a real-time information of the movement of their ship across the world. This software facility, the company which is AP Moller Merck, they have themselves arranged to install those particular software facility because they have already hired the professionals. So they have arranged to install that particular software facility in the agent location in India. The agent was required to reimburse this particular amount to whom? To this particular foreign company, the shipping company. So what the agent in India needs to do is the reimbursement of this particular the software which was being installed in that particular in that particular agent premises. The question, students, that came up was that whether this payment in the form of reimbursement of the software facility installed in the agent premises, whether that reimbursement can that be considered as a case of a fees for technical services. can we consider this payment as a fees for technical service? The Supreme Court said no. So why is it so? Because this is a integral part of this particular software system, students, is an integral part of the shipping business, because obviously every particular orders were being booked through this particular software itself. So it was very much integral to the shipping business primarily. That is point number one. Secondly, students, it was merely a reimbursement of that particular expenditure which was incurred. That is what it was. It was merely a reimbursement of the expenditure which was being incurred, and the reimbursement was at the arm's length, meaning whatever was the cost that was being incurred by us, that is what we are asking from you. We are not making any profit out of this reimbursement, this activity. So that is merely a case of a reimbursement. Whatever fees that was being charged on us by the consultant, that fees is what we are reimbursing from you, and that is the kind of a payment. So therefore, this was held as a this was held as not a payment towards the technical service. In fact, this was considered as a business receipt, because for the software company, the shipping company, for them it was like a business expenditure against which they are taking a reimbursement. So for them it is very much a business receipt. For them it is very much a business receipt, and therefore because it is a business receipt in their hands, accordingly it was not chargeable to tax as a fees for technical service. As a fees for technical service. And why is it so, students? Why they were emphasizing this not to be charged as a fees for technical service? I think all of you are aware of the point. This is not to be charged as a fees for technical service for the simple reason that, students, for the simple reason that if it were the income tax department was more concerned to charge this as a fees for technical service. The income tax department, they were very much concerned to charge this as a fees for technical service, and there was one reason for that. Because FTS payment, if chargeable, if it could be targeted as an FTS, then as per the treaty, it could be taxed in India, which is the country from which the payment was, the country from which the income has arisen. So as per the treaty, then the FTS payment could be taxed in India. But if this would be characterized as a business receipt, then as per the treaty, it could not be taxed in India. So that is the reason why the department wanted this particular payment made by the agent towards the reimbursement of the software facility installed in their location. The department wanted to treat this payment as a fees for technical service, whereas the assessee said that no, it is not an FTS, it is very much a case for a business payment. So students, what is that you will write it in this context? So here the payment of, this is point number one, which you will write, reimbursement of expenses. The payment could not be treated as a fees for technical service. It was merely a reimbursement of an expenditure, could not be treated as an expenses, this thing. Secondly, you can also write the fact that the payment was made by the agent at arm's length, meaning thereby only the cost reimbursement was taken without any element of profit, and this particular this system software was integral part of the shipping business, and because it is a integral part of a shipping business, therefore this payment can be considered as a business payment and cannot be treated as what, as a payment in lieu of technical service. That is the only thing that you need to write in this context. So integral part of the shipping business, and therefore could not be treated as what, this thing. So just write 3 pointers, that should be all. Now this is an important one. In fact, in the mock test paper, I've seen this case law in your mock test paper. So what is the point? Whether the amount paid by a resident Indian end user to a non-resident computer software supplier for use of computer software, can that be treated as royalty? Students, just pay attention in this case law. This is majorly the case of the end user license agreement. This case law, students, the computer software, always visualize in your examination also the question that they will be giving you would be on the license software that we use. We all use the license software, like for example Microsoft operating system. If you have to use it in our PC, what is the protocol that needs to be considered? So what would be the protocol? The protocol for the Microsoft operating system would be that here would be the case wherein I need to make the payment to the Microsoft. Okay, Microsoft will be giving me the software. Generally the software would be in the CD. Now this CD, what I'm going to do, I'm going to run it in my computer. Okay, or otherwise you can also download it and run. There is no issue only on CD, but this is how it could be. So maybe a CD, I'm running it in the CPU and I'm running it. Now in that case, what will happen? They will ask me some terms and condition to be I agree, I agree. I'll just click those things and then it will run on my computer system, and then it will get captured. Okay, now the question therefore is, now this kind of computer software they have also kept selling to all of you. They have also kept selling it to all of you, isn't it? So now the question to all of you therefore is that here the consideration which we have paid to Microsoft, I have paid for that operating system, you have paid for the operating system, can that be considered as a payment for? Can that be considered as a payment for royalty? Is this a payment for a royalty that we are doing it, or it is like a sale of goods? So will it be considered as a royalty payment or should it be considered as a business payment? Now before we start looking into this particular case study in terms of what is the language used, I will also give one more example and then you will enter into this particular case study. That example is that of a book. I am the author of a book. So therefore what happens, which is published by Bharat Law House. So therefore whatever is the content, I give it to the Bharat Law House. That is a copyright which I have on that content which I'm sharing it with Bharat Law House. So the amount which Bharat Law House is giving for my content, that primarily that what is the right which I have given now to Bharat Law House? What is the right which I have given it to the Bharat Law House? I have given him the right to reproduce the copies, and that is the right, that is what has been given by me to Bharat Law House, right to reproduce a copy. So to right to reproduce a copy, Bharat Law House is giving me the payment. So therefore that payment would be referred as what? The payment towards what? Towards the royalty, and the answer is yes. So therefore this is a royalty payment because I've given him the right to reproduce. After that, Bharat Law House will reproduce the copies and then they will sell it to all of you. Now then what Bharat Law has given to all of you students is the right to use. What Bharat Law House has given to you is a right to use the computer software. Did you all got this one? What Bharat Law House has given to all of you students is the right to use the computer software. So you now need to distinguish between the two, right to use versus right to reproduce. Okay, so that is a distinction. So when the payment is given by you to Bharat Law House, are you paying for royalty or you are paying for goods? You are paying for goods. Will for the Bharat Law House, will it be a royalty income or a business income? Business income. Whatever you are paying to Bharat Law House. What Bharat Law House is paying to me, will it be a royalty income? Yes. For me it is a royalty income. Now students, tell me one thing. Microsoft has given you this software. This is a software which is a licensed software. Is it a right to reproduce in the or right to use? The operating system software which is given by Microsoft to you, is it for right to reproduce or is it for right to use? It is for right to use, and if it is for right to use, not to right to reproduce, so whatever payment that you are giving it to Microsoft, like whatever is the payment that you are giving it to Microsoft, will it be considered as a royalty or will it be considered the business income of Microsoft? Business income. Just like the way whatever you are making the payment to Bharat Law House, that is his business income and not the royalty income. Same way, whatever we are paying to Microsoft for using that particular software, that is not a royalty, that is a business income. But be careful, here the income tax law has gone on to define the royalty to include what? To include, so this is important, include transfer of all or any right for use or right to use a computer software. So that royalty will also include what? This include the transfer of all or any right for use or right to use a computer software. This is a Indian Income Tax Act definition. That royalty will include any payment which is made for the transfer of all or any right to use the computer software. As simple as that, including the granting of the license. Now this is what I have put across over here. There is an important difference between right to reproduce and the right to use. the computer software. Whereas the former means the right to reproduce would amount to parting with a copyright by the owner thereof, the later would not. The former, students, will what, students? The former will be considered as a right to reproduce, whereas the later will not. That is what there is the point, students, over here. Be careful. So, right to reproduce means I have given the amount to Bharat laws, right to reproduce. So, is that the royalty in my hands? Yes. Right to use, what Bharat law has given to you is right to use. The consideration that you are paying, is it royalty? No, it is a business income. So, right to use computer software. Whereas the former would amount parting off with a copyright by the owner thereof, that is me to Bharat laws, the later would not. Bharat laws is not parting any copyright or the ownership right in that particular book, or Microsoft is not parting away any right of copy in that computer software. Under the non-exclusive license, the Microsoft what license that we get, it's non-exclusive, means they are selling to operating system to across the world. They are selling this particular this license across the world. So such non-exclusive means it's like a standardized software. Standardized software are to be sold across the world, isn't it? Standardized software. These are the standardized software because it is non-exclusive. Had it been exclusive, then it is this is not a standard software. This is a customized software only for the client need. Therefore, it has been made as an exclusive for you. So under the non-exclusive license, the end user only receive what we have got when we are using Microsoft. We have got only receive a right to use the software and nothing more. So the what we have got is a right to use. But as far as the Income Tax Act is concerned, even the payment for the right to use the computer software will be considered as what? As a royalty income. But then, as you all know, fine, as per the Income Tax Act, it is considered because of the enlarged definition of royalty. As per the Income Tax Act, it is considered as a royalty, but ordinarily it is not a royalty. Right to use is not, payment for right to use is not a royalty. Payment for right to use a computer software is not a royalty, but they've defined this as royalty. But then in that case, we all know whatever is the position under the Income Tax Act, that position under the Income Tax Act should then will come with a direct conflict with the DTAA. This position of royalty which has been taken in the act, this royalty position will now be compared with what is the royalty definition in the DTAA. And if in the DTAA, by payment for right to use computer software, payment for the right to use the computer software is not defined as a royalty, is not been defined as a royalty, then in that case, whether we should go by the treaty or whether we should go by the act, we should definitely go by the treaty. Because in the treaty, if it is not defined as a royalty, it implies that it is then to be considered as a business income as per the treaty. And if it is considered as a business income, chances are very high that unless you have got any permanent establishment in India, you cannot tax that particular business income. And that is the reason why whichever is more beneficial to the assessee, that is what will prevail. So just keep in mind this, that our act definition, right to use the computer software, is also defined as a royalty income. However, we should make a distinction between right to use versus right to reproduce. In the ordinary sense, right to reproduce is payment for right to reproduce is a payment towards the copyright, versus payment for right to use cannot be considered as payment for right to use cannot be considered as what? Exactly, students. So payment for right to use cannot be considered as a royalty, because this is not parting any right of the owner in that particular software, and hence such particular consideration paid primarily cannot be considered as a payment for royalty. Okay. So in a non-exclusive license agreement, what we the user get from Microsoft is only a right to use it, but not the right to reproduce it. Although right to use as per our act, Income Tax Act, is to be considered as a royalty payment. But as I told you, we will have to then look into DTAA. So whether right to use a computer software, if it is not considered as royalty as per DTAA, then the position under then the position under DTAA is more beneficial as compared to the position under the Act. And accordingly, students, accordingly, that is what will prevail over the position under the Act. I hope that all of you are clear with this one. Venkatesh Premises Cooperative Society, this is an important, this is a taxation of mutual concern. Students, this is about few charges on which, as you all know, mutual concern. In a case of a mutuality, students, in the case of a mutuality, in a mutual setup or a mutual organization, any particular consideration which is to be applied for the member, for the common pool of the members, the consideration which is taken to be applied for the common pool or for the common benefit of the members at large, then such consideration will not be considered as an income. The principle of mutuality is what is applied in this case. So there are few charges which was being discussed over here, on the basis of which it was being said whether these charges will it be considered as a income taxable or it should not be considered as an income. So which are the few charges? First is the transfer charges, students. So transfer charges are payable by the outgoing member. If now when I'm selling it off, so there should be a transfer charges. Now what happens is that supposingly what happens from the buyer also the transfer charges are being collected. Now if from the buyer the transfer charges are being collected, this money, students, be careful, this money is to be will be applied by the by the society only after that member has been included as a member of the society. That buyer is included as a member of society, only then that particular money can be utilized. And therefore such transfer charges, which primarily can be used only when the buyer would be considered as what, as a member of the society, and thereafter this transfer charge would be applied for the society for the benefit of the members at large, then in that particular case the concept of mutuality will apply, and hence it will not be considered as income. Non-occupancy charges is when when the owner does not reside in that house property and the house property has been given to a third party on rent. So whenever a house property is given to a third party on a rent, the society will charge a non-occupancy charge from such members. Now that is again that because you are earning a rent, at least give some share of the rent of yours to the society, so that the society can use that rent for the benefit of members at large. And therefore this non-occupancy charges, if that is collected by the society, will not also be considered as an income, because the concept of mutuality will also apply over here. Thereafter, point number C, contribution to the common amenity fund taken from a member disposing property was utilized for making heavy repairs. Now obviously you many things repairs, and there are many sinking funds or the repair funds which is collected from the members, so that tomorrow whenever the society requires a kind of the reconstruction, then those particular fund can be utilized for the purpose of doing the reconstruction in the society. And therefore this particular fund amount collected from the member, will that be considered as an income of the society? Answer is no. Again the concept of mutuality will apply. Quickly now, students, there are small points. We'll wrap it up now. We are on the verge of completion. Small case laws are there. I'll wrap it up very quickly on these things. Issue arising on the raising of finance. Now students, question that was there: expenditure incurred on the issue of collection of debentures shall be treated as revenue expenditure. Students, always keep in mind the two things. Or may I just put across, because this is very popular in the adjustment. Students, just write it this case. ROC fee paid. ROC, just a conclusion now. Fees paid to increase the authorized share capital on issue of right shares or bonus shares right shares or bonus shares. So that is a capital expenditure. So this is irrespective of, be careful, because many students, whenever they say the word, sir, bonus shares, it is not a capital expenditure and therefore allowed as deduction. Wrong. Expenditure at the time of issue of shares. Now issue of shares would be again right shares or bonus shares. If it is right shares, it's capital expenditure. Right shares or IPO, the initial public offer. If it is a bonus share, it is not a capex and therefore allowed. So please understand, the expenditure at the time of issue, that is what would be allowed. If it is a issue of what? Bonus shares. Then General Insurance Corporation, that case law is there, students. So this is one thing you have to be very careful. Now ITC case is the expenditure at the time of issue of convertible debentures. What I've written, I'm dictating, so don't worry if what I'm writing it very fast now. Expenditure at the time of issue of the convertible debentures. So this is what you have issued is a debenture. Debenture is like a loan, so it is not like a capital expenditure, and therefore if it is not a capital expenditure, therefore allowed as deduction. Expenditure at the time of issue of convertible debenture. So just keep in mind to this thing, the ROC fee paid in the first part, whether it is for the right issue or IPO, or whether it is for the bonus issue, doesn't matter. All is considered as capex and therefore will not be allowed as deduction. Berger Paint, students, I think all of you are aware that here the security premium, because students, 5% of capital employed is what we take for the company. 5% of cost of project is compared with the 5% of capital employed. Whichever is higher is the qualifying amount for step 2. And in step 2, students, what we do? In the case of step 2, that qualifying amount of step 1 is compared with the actual preliminary expenditure, and that lower of the two is the final amount on which 1/5 is applied, and that 1/5 would qualify for deduction. So here the last point that comes into picture is that whether the capital employed, in this case the share capital, long-term borrowings, are what is covered, the share capital which is covered, whether the share capital, whether it includes the share premium, and the answer is no. Berger Paints, that's it, nothing more is required. Share capital, whether it includes the share premium, and the answer is no. Now this is an important one. Interest income from share application money, can the same be set off against the public issue expenditure, or is taxable under the head income from other sources? So in this context, students, if supposingly, as you all know, you have to put up a money when the share application money is received, till the time you do the actual allotment, till the time, students, you do the actual allotment, students. Till the time you do the actual allotment, students, what happens in this context? You need to put up the money temporarily in a particular trust account, bank account, and once the allotment is done, that the money will then be received by the company. Till the time if there is an oversubscription, then the money would be returned along with the interest. But if you do the allotment, if the company does the allotment, then the money is received along with the interest. The question is, what is the treatment of that interest amount? Whether this interest income, is it taxable separately? That is a question. Whether that interest income, students, is it taxable separately? To that the answer is no, because what they have said, this interest income, students, this interest income, in this particular context, what we are going to do, we are going to adjust from that specified preliminary expenditure. We are going to reduce whatever is the expenditure, the preliminary expenditure in the 35D, whatever are the expenditure, from that we are going to reduce this particular income, and the net preliminary expenditure will then be compared with the qualifying amount. The net preliminary expenditure will then be compared with the qualifying amount. Lower of the two is the final amount on which 1/5 is what is allowed as deduction. Now, why this particular position that we have to take over here? We have to take this particular position because, like the way Brook Bond, in the case of Bokaro Steels Limited, if you remember, the expenditure, we were discussing the concept of actual cost. And in the concept of this actual cost, the expenditure which you have incurred on the trial run of that particular plant and machinery, that particular expenditure was being capitalized. That expenditure, students, was being capitalized, and the product which was generated in the trial run, if that is sold in the market, for which you have received some price, that particular price, students, will be reduced from the actual cost, as per the Supreme Court judgment in Bokaro Steels. Why it is reduced? Because it is also having the nexus with the process of what? The process of the bringing the asset into existence or putting it into its working condition. And that is the reason why this income, the product generated during the trial run, is what is reduced from the actual cost. So same way over here also we will do the same thing. That is to say, this interest income which you have earned when the money was temporarily put up in the share application money, this interest income is because of the mandatory process of the public issue. This is because of a mandatory process of the public issue, and the public issue therefore requires this as what? That this need to be deposited. So therefore, this particular interest income, primarily which has been accrued, is eligible for set off against what? Against the public issue expenditure, and the net public issue expenditure is what will be compared with the qualifying amount. Lower of that same will be the final amount on which 1/5 would be applied as a deduction for every year. So this would be reduced and not charged separately, not charged independent. This is not an independent process. This is not independent to the public issue. It is an integral part of the public issue, and hence whatever is the expenditure which you have incurred on the public issue, against that expenditure, this income, which is also a part and parcel of the public issue process, this income will be adjusted against this expenditure, and the net of the expenditure will be compared with the qualifying amount. Lower of the two is what would be the final amount on which 1/5 will be applied for the purpose of deduction. Reebok, I think this is already being targeted. If I am giving a loan to my sister concern or to my business associates, interest free, whether the interest expenditure on such loan, will that be allowed as deduction? And the answer is yes, because giving the loan to my business associates, primarily, even if it is at interest free rate, doesn't matter. It is on account of business or a commercial expediency, and because it is out of a business or a commercial expediency, so therefore in that particular case, the interest expenditure, will that be allowed as deduction? And the answer is yes. In the case of IBM Global Services, students, there were two payments which was being made. One payment was for the sharing of for the sharing of the customer database. So here the Indian company IBM Global Service India Private Limited, they have made two payments. The first payment was for the use of the customer database, not to acquire the customer database, but it was only for the use of the customer database. And the second one was to get the skilled and experienced employee of the JV partner in my own payroll. So let me get him in my own payroll, the skill and the experienced particular employees of the JV partner. For that purpose, I am making a lump sum payment to my JV partner. So whether that lump sum payment to the JV partner, will that be considered to be a capital expenditure? The Supreme Court has said it no. Reason is, point number one, the first payment, which was for the purpose of the use of the customer database, is not for acquiring any asset, because you are not paying to acquire the database, you are making the payment to use the database, and hence this particular payment cannot be considered to be a case of for a capital expenditure. Second is, students, the SSC got the right to use the database So that is what I have already told you. So it is only for use, not to acquire. So this is point number one. The second point, students, is about the payment for the purpose of getting the skill and the experienced employee of the foreign JV partner on board of my payroll was essentially for what purpose, students? Was essentially that I'm making you a premium payment for that, because by getting these employees on my payroll, I will reduce significantly my training cost, which otherwise I may have to incur to recruit a new particular employee for the post. And that is the reason why such payment also is not is for the purpose of reducing the operating cost of the business, and thereby enabling to conduct the business in a more profitable manner. So this kind of a payment which I am giving it to my foreign JV partner is majorly to reduce the operating cost of the business, and to conduct the business in a more profitable manner, that such payment is made, and hence we will say that such expenditure is revenue in nature. Such expenditure, students, is it revenue in nature? And the answer is yes. The next case law, students, is Honda Seal. Now, this is an important one. The Honda Seal case law, students, this is an important case law. In which case, what has happened? So, students, this was a royalty payment towards acquiring technical know-how and technical assistance. Will this be considered to be a capital expenditure? And the answer is yes. In fact, it could be seen that if there is a termination of agreement, then the business itself will get closed. Students, if there is a termination of this particular agreement, then if there is a termination of agreement, the joint venture itself would come to an end, and there would not be any further continuation of manufacture of product. So if I'm giving the technical know-how payment as per the agreement, so in that context, it implies that this is a capital expenditure, because the payment is linked to that agreement, where till the time the agreement exists, that the SSC would be in a position to undertake the manufacturing process. Once the agreement is terminated or come to an end, primarily this entire business of the SSC in India also will come to an end. And that is the reason why payment in consequence of such agreement, which is in the nature of technical know-how payment, will be considered as a capital in nature. Will be considered as a capital in nature. That is what Honda Seal Cars Limited has held. TVS Motors and all, it is a replacement of parts. Students, replacement of mold, dies, jigs. So is it a case, is parts being replaced? It is not an independent plant and machinery, and because it is not an independent plant and machinery, therefore such parts being replaced, will that be allowed to you as a deduction? To that the answer is yes, under section 31. Under section 31, in the form of a current repairs, this particular replacement, will that be allowed as deduction? And the answer is yes. Now students, if you all see in this case Aram Softronics Supreme Court, this is an important judgment. In which case, what has happened, students, was this, that this was a company, if you remember, and this was an ATIC company, and in ATIC there was a provision of 100% in the first 5 years, or 25%, and thereafter 25% in the next subsequent 5 years. This 100%, which is going to be from the first 5 years, will begin from the year in which the SSC undertakes the manufacturing, or it will commence from the year in which there is a substantial expansion of the SSC's business, the eligible business. Two things, students, keep in mind. This 100% will begin from the year in which the SSC starts the manufacturing, or the year in which the SSC does the substantial expansion. What did I told you? 100% for the first 5 years, and for the remaining 5 years it is 25%. This is what ATIC was all about. So again, the question that came up here, what SSC did was, he was in the first 5 years, and it claimed the deduction of 100%. Now by the end of the 5th year, it made a substantial expansion. So what did I told you just now, sometime back? 100% will be for the first 5 years. First 5 years would mean that the the previous year from when the SSC starts the manufacturing. From there you'll do the first 5 years calculation, or the first 5 years could be also from the previous year in which the SSC does the substantial expansion work. This is how these first 5 years would be defined. Now, the fact that in this particular case the substantial expansion was over at the end of the fifth year, so therefore the next 5 years got generated. The next 5 years got generated, as I told to all of you. And accordingly, in this context, the first 5 years 100%, the next 5 years also would be eligible for 100% profit linked deduction in this case, because the criteria of the first of 100% is fulfilled by the end of that fifth year period where the SSC did the substantial expansion as well. So it implies that again that initial assessment year of 5 years is going to be considered. Therefore, the SSC would be eligible for 100% deduction even for the next 5 years. But one particular question that has been given to you over here in the third box, this is an important one. In the third box, students, the point that has been given to you is this: that supposingly the substantial expansion happens on the 8th year. So how you are going to go about it? The substantial expansion happens in the 8th year. So the first 5 years it would be 100%. 6th year to 8th year it would be 25%. Now 8th year substantial expansion has taken place. So therefore in that case the year 9 and the year 10, the year 9 and the year 10, students, for the next 2 years it would be what, 100%? Yes, it would be 100%. But again I'm repeating this particular point, it would be only 100% for the next 2 years. Please don't make it for next 5 years 100%, because the deduction would be only available for 10 years. So if the deduction is available only for 10 years, so you cannot say that from 9th year onwards you will get another 5 years. No, it will be only 9th and 10th. It will be the 2 years in which you will be getting what, the another 100% deduction. So this is what it would be. This is the third box. So I'll request to all of you just to go through the third box once. Now Seabros Hotel, students, you know 35AD deduction in under section 35AD is for substantial expansion of business. Substantial expansion of the business. Now this substantial expansion which is there, sorry, in the case of a hotel business, 2-star or above. Hotel business, students, they say 2-star or above category. The 2-star or the above category, that is what they have referred for the hotel business. 2-star or the above category. 2-star or the above category, students. So if this is the case, students, 2-star or the above category in this context, here the question that then arises in this regard: the SSC made an application for 3-star hotel, okay, and in the same year in which the SSC made the application, it has commenced the business. However, the SSC's application got approved from the next year. So if the SSC's application got approved from the next year, whether the deduction, will it commence from the next year then? Will the deduction commence from the next year then? And the answer is no. The deduction will be in the first year, that is the year in which the application took place. HCL Technology, students, primarily is now as a part of a law, so I'm not discussing this. Remember, students, in the case of 10AA deduction, export turnover and the total turnover has been defined. Now export turnover and total turnover exclude what? Insurance, telecommunication charge, the insurance, telecommunication charge, the freight, isn't it? And also the charges for the technical services provided outside India. So what are the case of the exclusion, students, over here? So the exclusions which are to be considered here is the fees for technical services which are provided outside India. Even now that will not form part of your export turnover or the total turnover for the purpose of section 10AA. So what is to be excluded from section 10AA are: number 1, the telecommunication charge, the telecommunication charges, the insurance, the freight, and the charges for the technical services provided outside India. So that charges for technical services provided outside India is because of this judgment of the Supreme Court in HCL Technologies Limited. Container Corporation India, students, whether the inland the container depots, whether the inland container depot, students, can that be considered as an eligible infrastructure facility for the purpose of ATIA deduction, where the explanation of ATIA talks about eligible infrastructure facility includes inland port. Inland port means in the land, port is there. So in that case, whether therefore inland container depot can that be considered as an eligible infrastructure facility, the Supreme Court said yes, it would be. Because customs clearance are carried out in the inland container depots, and because the customs clearance are carried out in the inland container depots, therefore it is a part and the parcel of inland port, and hence any entity developing, operating and maintaining the inland container depots will be eligible for deduction under section 80IA. The last part, students, is Chetak Enterprise Private Limited. Here in this particular case law, what is the situation? In the case of Chetak Private Limited, students, here what was the scenario? Students, if you see over here quickly, there was a conversion of a firm into a company. The firm got converted into a company. So there was a case of a conversion of a firm into a company. Now the question was this, that whether the company which was converted, could that be eligible for the purpose of deduction of 80IA? That became the issue under consideration, students. That became the issue under consideration. So if you see over here in Chetak Enterprises, here first of all the memorandum and association of the company, it appears that this was already pre-planned. From this entire facts of the case, it appears that everything was pre-planned, and therefore because it was everything was pre-planned, the firm initially knew that once it will grow, it cannot grow as a firm, it will then become a company. But then the question will be about the deduction of ATIA, because then the deduction will get hampered, because you are another person now after conversion. So therefore this firm, at the very start of the operation itself, they made lot of initial agreements and the planning in such a way that even after conversion, their deduction should not get hampered. That was something was planned at the very outset. So see here, the facts itself will make the things very clear to all of you. The first one happens to be as a SSC company, MOA means that company which came into existence after conversion. Their MOA itself says, what was the object? Main object was to acquire as a going concern, acquire the business of the firm as a going concern and continue the business. Acquire and continue, these are two important words. Acquire and continue the business. Point number B, students, was about that the agreement initially by whom? By the state government and the firm clearly provided that tomorrow when the firm will get converted into a company, then the recognition of this agreement should be extended even to the company. Tomorrow when the firm will get converted into a company, the this agreement should be extended also to that company which got converted, and thereafter the state government also had granted the sanction to the company. So therefore in that case, whether the company, private limited company, whether it will be eligible for the deduction of section 80IA, and the answer was yes. So we have done with this particular case law side, students. Now with this one, I'll go to the last lap of our case law segment, students. You will have to just read this, just go through this case law 2 times, students, and that is what is required. Only 2 times, students, is what is, you just need to listen it and the crux of it, and that should be all. Now apart from this one, students, in between there are some few exemptions, old exemptions which are being there, which all of you are aware of it anyways. These are the old exemption, students. Remember from Gujarat State Fertilizers, come to case law number 41. Now subsidy or the grant or cash incentives or duty drawback or waiver or concession or reimbursement to the SSC given by the central government or state government shall be treated as income. I think all of you are aware. The government of India has discharged its dues of paying the subsidy by issue of fertilizer bonds. So that subsidy, students, has been given in the form of what? Fertilizer bonds given to the SSC to compensate the loss of the sale of fertilizers. Should be treated as what? Should be treated as business income. Obviously, this is to be treated as what? As a business income, because this has been given in lieu of your business loss. In lieu of your business loss. If the subsidy would have been treated as business income, loss on sale of fertilizer issued to be allowed as a business loss. Same thing. So the government of India has discharged this thing by giving this given to the SSC to compensate the loss of fertilizer. Should be treated as business income. Now, so therefore, supposingly that bond which has been sold, that fertilizer bond, if I have sold it, if that fertilizer bond which I have sold it, if it is in loss, then even that loss is going to be treated as what? As a business loss. So it's like a twin blade. So subsidy, when you would have received the bond, it is an income. But when you would have sold the bond, so how much you have recognized as income? Say 100 rupees. But at the time when you would have sold it, say at 80 you have sold it, that 20 would be referred as what? This is a business loss. This is a business loss. So when you have recognized this as income originally at 100, when you have received this bond, subsequently when you are selling this bond, say at rupees 80, then that loss of 20 will be referred not as a capital loss, but as a business loss. So this is what they are trying to say in this case. Raila, I think this is just like your Chennai Properties and Investment Limited. So here in this context, we all know that in the case when the SSC's business is that of to give the property on lease, then in that case the rental income will be chargeable under the head PGBP. Similarly, if the SSC's business is to give the property on release and some of the tenant, they have to give a compensation to prematurely terminate the tenancy agreement because they are getting a better particular tenants, so they want to prematurely terminate some of the tenancy agreement, and for that purpose if they are giving the compensation, can I say such amount paid is in the course of the normal course of my business activity? My business is the business of giving the property on lease, and the leasehold right, students, was for more than 12 years, and because the leasehold right was for more than 12 years, accordingly the SSC became the deemed owner. Accordingly, students, the SSC became what? The deemed owner. Now in this case, the partnership firm, the partnership deed, in fact the partnership deed was not clear as to what was the main business of the partnership firm. What was the main business of the partnership firm? The deed was not clear. Unlike in the case of Chennai Properties and Investment Limited, where the memorandum of association of the company was very clear to suggest that the main business of the SSC was to build the house for the purpose of let out. But here the main business was not very clear, and accordingly in this particular case, the partnership deed was not providing it with full clarity what was the main business of the SSC. Point number one. Second point, students. Second point also was equally critical, that the partners have failed to establish that their main income was from what? Was from letting out of this house property. The rental from this house property was their main income. Even that the partners have failed to establish before the court, and therefore neither the deed was clear to establish that the property was held for the purpose of its business of giving the outlet on rent, and the second one, even the partner have failed to establish that the rent formed the substantial portion of their total income. In that case, the Supreme Court has held in this case law that the rental income will be chargeable under the head house property and not under the head PGBP. Under the head house property and not under the head PGBP. I think Tamil Nadu Tourism Development Corporation, the assessee was engaged in the hospitality, and thereafter it has given this particular. It was running some of its hotel unit, through franchisee mode, wherein the franchisees were occupying that property. They were running the hospitality business of the assessee, and thereafter the assessee was being given a fixed per month amount for that particular project, for that particular property, a fixed particular amount for that particular property. The question was this, that the amount so received by the assessee from those particular franchisee as a fixed payment for the property, will that amount be classified under the head house property or will it go under the head PGBP? Under the head PGBP. Answer is again clear. Why under the head PGBP? Because the entire agreement between the assessee and the franchisee made it very clear that the assessee intended to do the business, its hospitality business, through the franchisees, its hospitality business through the franchisee mode. So it was very clear that the SSC intended to do its hospitality business in through the franchisee mode, and accordingly that portion of the income was chargeable under the head PGBP. That portion of the income, students, was chargeable under the head, which head? PGBP. Is that clear to all of you students now? Every one of you. So this is how the things was being considered over here, and that is how the things has to be looked upon. I think we are done with this particular context over here. Kotak security, students, TDS. Now these three sections are the TDS sections which is being there. Kotak security, in fact this Prasar Bharati. So students, the last one, Prasar, I'll just go in the reverse order and I'll select some of the case law, and 2 or 3 case law, friends, you can just read it and finish it off. Students, as you all know that the agents who are there, if supposingly they are acting independently in their ordinary course of business, then in that case the payment that you are making to them cannot be considered as a payment made as a commission and brokerage to that agent qualifying for 194H TDS. It cannot be, because in many of the advertisement at Jagran Prakashan, living media devices, there are case law which has suggested that these particular agent are not acting wholly or mainly for you. In fact, they are acting for others also, and it is acting in the ordinary course of business, and it will do for everyone, for money, for everyone they will do for money. It is not that they are doing only for me, and that is the reason why this amount which they are retaining cannot be considered as a commission and brokerage. That is what was being concluded. But in the case of the Doordarshan advertisement, there is a kind of a full-fledged agreement. There is a full-fledged, what students? An agreement which are being there in the case of Doordarshan. Now in this context, the agreement is such that these particular agents are being referred as an agent. The entire terms of the contract indicates that the entire terms of the contract will indicate that the person is intended to be considered as the agent of the assessee. All the incentives which are being given or which are sought to be given to these persons are majorly for the purpose of delivering the targets, and therefore it was a purely an agency arrangement in this context. So it was for securing more advertisement for them and to earn more business from the advertisement agencies. So all the incentive was structured in that way. The agreement itself was using the expression commission. Going by the facts of the entire case, it was being very clear. Students, going by the facts of the case, it was very clear that this, they wanted to consider this to be a part of what? Part of their agency business. And that is the reason why this payment made by the Prasar Bharati to all these players was considered to be a case of what? To be a case of an agency payment, and accordingly the Prasar Bharati was required to deduct TDS under section 194H. Kotak security, students, technical services. So students, you remember in the case of stock exchange, there is a standardized facilities which are being given to all the stockbroker. So the stockbroker operates in a standardized computerized facilities. Now whenever there is a standardized facility which are available, that one can easily say that there is no technical service in that. Why there is no technical service in that? Because as per the definition of technical service, there has to be a human involvement that should be there. So unless and until there is a human involvement, the payment cannot be characterized as a technical service. So therefore it can be considered that whatever is a standardized facilities which are there for which the payment is made, on such standardized facility, students, the payment cannot be characterized as a technical services. Cannot be characterized as a technical services. And that is what this case law on Kotak Securities was all about. Okay. So students, that is what Manipal Health. You can just read it, students. And that is all, students. In this context, we are done with the case law. 2 or 3 case laws, I've just left it over here. You can just do this one, students. They are very old case law. Quickly run through the same, students. So now, students, a very quick announcement of the All-Star batch, 100% English comprehensive batch, which is going to start from 25th of May. And you can just tell to all your those students who are appearing for November 22, even May 23 students can definitely take up this particular batch, because then the amendments will be taken up separately. This is an English batch which has been there, and CFR Group 2, DT, SCMP and IDT. Hindi batch is also there. For that you can just inquire it across it. So this is what it would be from June 1. So timing would be, my timing, students, I'll start from 1st of June and I'll start at 9 p.m. 9 p.m. to 12 a.m. It's 3 hours at night I'm going to take every day. So that is my slots which I'll be covering it up in English. Other faculties timings, Devang Kothari for SCMP 7 a.m. to 10 a.m. and Mohammed Rafi sir would be at 6:30 p.m. to 8:30 p.m. so that you can all do your lectures also properly along with your articleship. So if you are doing your articleship, that is not an issue. You can still complete this particular paper with full confidence and with ease. Is that clear to all of your students? Fine. So this is what it is. Subscription benefit. Now only factor that you have to do, students, is that you will have to use the code CADS. The referral code that you will do for subscription is CADS. Please tell to all of your friends that in this platform CADS is the code which will give you the discount. Referral code they will ask you at the time of subscription. There is only one code. CADS is the code which you will put it across to get this 10% discount. And that exactly what it is, students. Okay. So students, this is what it is. So you can take up subscription as low as 3 months. Please do it very soon because the price hike is going to happen now. So you just need, these are the old price, so you just try to take up the subscription soon. 3 months also you can take up the subscription, not an issue. 3 months also you can take up the subscription, and in that case you will take up 3 months for all the papers. You'll get at 8,500, put the code CADS, get further discount also. So that's the beauty of this entire plan in this context. Okay, just tell to all of your friends as well, students, about this one. I'll see you in the next session. Now this is all about the case law, students, which we have discussed, which we have detailed out in this context. Hope that you just quickly go through one more time now and mark for the one more time. You have to go through it quickly, between and mark on the day of the examination in the morning. Say 15 minutes. You'll mark some of the case law which you would have thought how to do it. Now one time in between somewhere you fit in to do it. Revise very quickly. Maybe in 1 hour you can revise it. So finish it off, this one case law. And last is on the day of the examination, 15-20 minutes, mark some 5 or 10 case law which you think that you may have to recap it because of the language, which I have marked as an important, like software, computer software, which I have marked some of them as an important one. So those some 10 to 15 case law which you think that it was troublesome for you to recall and all, difficult for you to comprehend. So just mark those 20 case law, allot 30 minutes for the case law reading, quickly reading for 30 minutes on the day of the examination. Do that. That should be all. Okay, all the best, students. Thank you.